Hello, everybody, and welcome to the Gold Rush. Sorry for the little delay there getting started. I was having some technical difficulties. You know, I, you think these old guys I work with would not be better at technology than me, but I seem to be having my fair share of struggles. So my apologies for that. I see that Wavy McFly's in the chat here. He wants us to hurry up. He's got a 5'3" Latin girls, Italian white wine, and some surf and turf waiting on him. So that sounds pretty fun,
The Wavy's
Mr.
having a
Wavy
good day.
McFly.
Good,
Yeah,
good job,
yeah, he
Wavy.
has it figured out.
Nice.
But yeah, we have a lot to discuss here today. We think a big move in the bond market is coming, and we think that will be a big help to a lot of these commodity futures that we're looking at. We also continue to think that we're in a weak dollar environment, so we have some charts to talk about with respect to that. We have some natural gas charts. Natural gas is making moves. It's been beaten down pretty good over the last few months, but it looks like it's due for a bit of a little scoop and score. So we'll talk to you about that setup and much more today. But Jason, what's happening today in the markets that has your attention?
Yeah, the biggest thing to me is just, this chart of yields, and everybody keeps talking about the same thing, which is yields are going lower. Short end of the curve, yes, and this is, I think, where it gets confusing for people, and I can't really articulate it right. I guess I haven't figured out the right words because there's many different parts of the yield curve. One of those parts is the 30-year yield. And part of the reason why I've had the thesis for so long that yields are going higher is the 40-year cycle. Like if you look at the 40-year cycle, you come out of a deflationary period, which was in the 30s. This is the Great Depression era. We come out of that deflationary period, we get to an inflationary period, and basically that has a blow off top that happens in 1982. Then we're 40 years in a down cycle for yields, which ends up with yields hitting its lowest level in 2020 during the pandemic, during COVID. Ever since then, we've kind of been in an uptrend. And the reason why I keep saying like we're headed higher, I think if anybody in the world was looking at this chart who's a technician and they would say, yeah, that's an uptrend. Let's say we put a different name on this. This is NVIDIA. They would be like, man, there's probably going to be a massive move out of this bottom. But because everybody's watching the Fed or they're watching economists or they're whatever they're watching day after day, they continue to say that yields are heading lower. And they're gonna head, like the other cycle. They head up, they head down. This is very normal in the market. But here, this is consolidation, and we're in a period of, hey, they're gonna force lowering rates. Like when we force things in the bond market, we see things in a bunch of different ways. Let's get to the next chart to show that.
And just on that long-term chart, Jason, like,
Mhm.
why do you think it's in a long-term uptrend? You went over the cycles, but like to me, like seems like we're in a raging bull market. Like the economy is doing very, very well around the world. You can look at financial stocks, for example, arguably the most important sector in the world. You can look all around the world. You can look at South Korea, you can look at Europe and the Deutsche Bank, and all over Asia, the United States. I was recently writing about the Canadian financials making big moves. That to me speaks to a very strong economy, um, and a strong economy means higher yields at the long end.
Yes, and I think so too. And I think that the global economy is strong. Now, there's going to be pockets of weakness everywhere, and people are going to point to the United States and these things. Sure, there's pockets of weakness here and there, but the United States is holding up fine. Globally, it's doing a lot better. If you even look at emerging markets, that's where actually all the global growth is right now. So once again, like we're in a period of weak dollar, most likely higher yields or elevated yields. The one thing we know completely is that inflation is sticky. We know this without a doubt. So if inflation is sticky, and then also we say that yields are going to go down with sticky inflation, with global growth moving to the upside, and so on, that just sounds the backwards to what yields usually do to me. And not to mention looking at, the Fed rate here. Yes, so there's two different parts of the curve on this chart. Now there's many different parts of the curve. There's, 1 month, 3 month, 1 year yields. I mean, there's yields all across the curve, all different durations. But if we look at the Fed rate basically is going to come down. And that doesn't mean that the 30-year has to go down with it. Sometimes the 30-year calls bullshit. And I think that's a very important term. It's very scientific, but bullshit is honestly the best way to put it, which is look at 2018. Great time. If you were trading during that time, it's a great example of what happened. Gold started to move up. So did treasuries. So bond prices, which is inverse to yields. So bond prices started to move up on the long end. So if you look at TLT, you'll start to see that bottom out. We started to move up. Basically, yields then rolled over. But that was a lot after that scenario. So first it was, the Fed's raising rates here, yields rolls over. And as that's happening, we're basically seeing bond prices call bullshit once again. Bond prices go up. So that's inverse of today. Today, the way we're looking at it is the Fed starts lowering rates. The 30-year continues to go higher. And so the 30-year is now calling bullshit as the TLTs start to go down. So I think the same scenario is kind of coming today. Like if they were to lower rates, what's the bullshit that the bond market is calling? I think it's calling for higher inflation. I think the bond market is saying like, hey, you're going to lower rates. You're going to create a lot of liquidity. Liquidity is going to lead to more inflation. And we're going to start to see that show up in oil. Like I can't see a scenario where the 30-year goes lower and then oil's going higher. I can't see a scenario where, gold is just ripping to the upside day after day and silver and all these different commodities, coffee and so on. And then the 30-year yield just rolls over on its head. I would be incredibly surprised by that. So that's something to keep on everybody's radar. I want to hop into the next chart. We don't have a ton of time today, so I want to get through as much as we can. So the next chart, only reason why I brought this was the fact that people keep writing me to tell me that copper has broken down, like on my models, which is funny. Like people are like, copper is broken down on your models. And I go, well, no, I shared a chart the other day, me and you, to our members about 52-week highs. Copper didn't hit a new 52-week low, so it kept it. And then I got a message right after that said, well, what about the KST? That had to cross over by now. No, it hasn't. So the KST is right here. So that is still actually in an uptrend at the moment. So it's in an uptrend. It hasn't crossed over yet. And if you look globally, you look at copper on the LME, you look at copper in different countries and different currencies and so on. Even at price in the US dollar in these different countries, they look great. They're holding up well. It's just consolidating up here. So I still think that copper is still going to move higher. I think the miners are telling you that as well. I think that's one of the most important things that a lot of people aren't paying attention to is the fact that the miners are holding up so well, which is something that we've looked for. And Sam and I have talked about a million times, which is if you're looking at gold and you're going, oh man, gold's dead. That's the end of gold. It's just going sideways. But then you're looking at the miners and going, well, those keep going higher. That's the most risk-on signal that you can get for precious metals. Same thing's kind of happening in copper. Copper's over here, consolidating, broke down, had a great breakout, came all the way back down. But then international miners continue to move higher. U.S. miners look fine. They don't look as good as the international ones, but they're definitely holding up really well. And then if you look at XME, the ETF for metals and mining, that's just making new highs over and over again. So I continue to think the cycle is working the way it should. The only thing is waiting on this last part, which is energy. Be patient here. Sam and I have talked about that a million times. I think everybody sees this chart and they think I'm the most bullish person on energy in the world. I'm saying that it should be next, but who knows when the next is. So continue to pay attention to that. And I think it'll come at some point soon. XLE actually made a 100-day high yesterday. So first time it's done that in a while. BP, Shell, a lot of the international oil and gas services stocks, they look great. So keep energy on your radar. It's probably coming up pretty soon.
Totally, Jason. And this next chart, I think, does a brilliant job of illustrating what's going on inside of energy. Ricardo, a star analyst at All Star Charts, put this chart together earlier this week, showing what's going on with not only energy stocks, but the gold miners and really any miner you look at, whether it's something like Sibanye-Stillwater that's in platinum and palladium, but just commodity stocks in general. we are favoring the international ones because we think we are in a weak dollar environment. So whenever you trade these international commodity stocks, you're not just betting on the company fundamentals. You're also making a bet on the currency. And a lot of these currencies around the world are strengthening against the dollar, and we see no reason for that to change.
Yeah, I
I
think
would
that's spot on. And
totally.
Rick's been putting together really good work on understanding the currencies as well as, what's going on with international markets compared to US markets. I think this is going to continue. I see no reason to think that this is going to continue. I think the money's going to be made in the international oil and gas stocks. Yes, our US oil and gas stocks will go up. I'm not saying they won't, but I'm saying the
But
money
just look at the new highs list. I mean, it's
is all
littered with
international.
international stocks. You don't see ExxonMobil and Chevron on there. You look at Imperial Oil, look at Shell, look at BP. These are all international behemoths that are very similar to ExxonMobil, but they're not in the United States. So that's the key difference there.
Yes, and I think the weak dollar trade and the weak dollar cycle is everything right now. Just the simple understanding that if the dollar's getting weak, where do you want to be positioned? Do you want to be positioned in things like, for example, if I'm talking about Japan, and let's say the yen is getting weak, how do I want to be positioned to take advantage of that? You wouldn't say, okay, well, I want to own Japan more. You would say, I want to own something outside of Japan. Same thing in the United States. It doesn't mean that I'm bearish on the United States or anything, but I'm saying that there's probably the outperformance. It will probably be international for now. It's going to change. It's going to go through cycles and shifts. But if I'm looking at the weak dollar and I'm seeing commodities move up, I think international will continue to lead the way. And whatever sector you're looking at,
Totally, especially financials.
especially financials. Yeah.
I
Yeah.
mean, man, that Deutsche Bank is out of control.
Things people
Uh,
don't say.
yeah,
But
seriously.
it's
Yeah, and
true. But it's true
this
now.
is a very similar chart here. This is our equally weighted basket of energy behemoths from around the world. Things like Shell and Total, British Petroleum, Canadian Natural Resources, so on and so forth. You can see all the tickers on the chart there, but this also does a brilliant job of illustrating what we're seeing, just consistent higher highs and higher lows in the international oil and gas stocks, while the US energy sector has been carving out a rather textbook distribution pattern. Now I think it comes down to whether or not crude oil resolves lower to see if the energy sector will actually be a top here in the United States. My bet is it's not. If you look at commercial hedger positioning in the well, rather, if you I think I like the money managers in the disaggregated COT for crude oil, because you can see that they have never in history been this bearish on crude oil right as it's at a very well-defined level of former support. And I think that's going to continue to hold a support because of that mispositioning there from historically the dumbest money on Wall Street.
Yeah, the
So
dumb money to the smart money is just telling the whole story, which is smart money wants to continue to buy, the dumb money wants to continue to sell. And at some point, this is going to come into a situation where a move is going to happen, and then all that short covering is going to happen at some point as well. I'm assuming XLE, after making 100-day high, we'll start to see more people get into it and see if it heads higher. And really, to me, I think that it could. I think the energy sector is really set up well, but I think being patient, finding positions as they come is very important at the moment. Now we're looking at natural gas. I think it was up 3% before we got on today. Seeing this, this is a falling wedge pattern. Coming out of this falling wedge, we're starting to see some upside. It also has a false breakdown signal as well, Sam. You highlighted this really well. So that's going to come over the level 3. So can you explain the trade on this chart?
yeah, totally. We talk about this pattern all the time around here, and it's the scoop and score, the failed breakdown, the call it whatever you want, but you can see that there's a very well-defined distribution pattern with $3 being the lower bound of that pattern. And natural gas futures recently broke below that, but there's no downside momentum. So it looks like this one, natural gas futures, wants to scoop back above that $3 level. And uh, historically, whenever we see that scoop and score pattern, it results in a massive squeeze. Everyone who got short on that break below three, they're all setting their stops around that level. So if that level is reclaimed, they'll be forced to cover and push the price higher in a really nice mean reversion move. So I think natural gas futures could easily head back to four before the end of the year. And that's a very significant move. That's what, a little less than 50%.
Yeah, I think that
So
I mean, we've been talking about natural gas for a while. We had Josh Young on the other day talking about natural gas, talking about the fundamental setup. When we just talked about it yesterday, and he mentioned that either way you look at it, he said maybe short term we're going to see some more upside because of weather volatility and so on. He said, but in the long term picture is clear skies ahead. And I kind of think the same thing looking at it seasonally speaking. Sam, you highlighted a great one looking at the natural gas in August. That's a really good move that usually happens. So I would keep
it's
this one
natty
on everybody's
season.
radar. It's natty season. Yeah, I'd keep it on everybody's radar. This is probably going to move. Everybody's always asking about natural gas. They always ask about it when I bring up the cycle chart every time. When's natural gas going to move? And I always say whenever it wants to move. That's the most
That's the truth.
significant thing. Natural gas does not care about what energy is doing. It doesn't care about what the market's doing. I always kind of laugh whenever I have a natural gas position and I look at the portfolio on a very red day. Most of the time it's green. I like almost every time. I don't know why. If it's just like, F this market, I'm going to do what I want to do. Like I always call the natural gas the exorcist trade because its head spinning around and does whatever it wants. Take the signals as they come. I'm not saying like it's a bad product to trade. It's a great product to trade. It's just heavily uncorrelated to everything, which makes it a phenomenal product to trade in the portfolio. So looking at coffee, this is one that's, Sam, you and I have been highlighting these long-term charts for a while. And you highlighted like one going all the way back once or twice. I'm looking at a bunch of them that are long-term. When we're looking at these charts, we're kind of all seeing the same thing, which is commodities have these massive bases that they're breaking out of, whether it's cocoa, whether it's coffee, the 50-year pattern on silver that we continue to bring up. Like there's a lot of reasons to be bullish on the commodity space. And these massive bases are kind of really telling us. And this is the thing that I've always thought about the commodity cycle is this commodity cycle, all of the commodities are going to carve out new ranges. Like copper is going to have a new range that it's not going to probably come back to.
We're
Same.
seeing that with lumber right now. I think that's a great example. So,
Yeah.
for all you gamers at home, zoom out on that lumber chart, and you'll see a very similar pattern to this. It's been sideways for decades, and it just broke out in 2020, 2021, and now it's turning all of that former resistance into support.
Yes, exactly. So, and if you're looking at gold, gold will probably 2000 might be a low the next, bear cycle of gold. I think that we'll see the same thing for coffee, like, these levels that we're seeing where the brown line is, where basically that would be the bottom for coffee for many years. Copper probably won't go back under five and so on. That's all not happening right now today, but I think that's close to happening. And this one broke out and then came all the way back, retested that breakout and it's going higher. One to keep on everybody's radar. Sorry, there's no ETFs for it these days. Joe
It's
ETF.
up almost 30% this
Yep.
month,
Hey,
Jason,
if you're in
and
Europe, there's
nobody's talking
actually
about it.
yes, they're in, and if you're in Europe, actually, there is a lot of commodity ETFs for coffee, which is funny. But in the United States, we don't have any anymore. It got delisted right before the big move, which is just about normal for those ETFs.
Totally. Europe does a lot of things wrong, Jason, but their ETF game is
Their
pretty strong.
ETF game is pretty strong. I'm kind of jealous. Like I'm glad I'm in futures these days, but man, like I'll talk to people. I have a bunch of traders who are looking to trade futures, so they'll come on. They'll be like, "Oh, in Europe there is actually an ETF for this." Like everything I list, I'll be like, "Coco, there is an ETF for this." In the United States, the only way to really get exposure through an ETF is DBA. DBA is one of the only ones that trades softs as well as ags. And so you can kind of get some exposure that way, but it's not a pure exposure like something like a coffee ETF or the coffee futures. So next one up, Sam. It's a great chart, something that we have continued to kind of talk about here, which is what's going on with China. We talk about across all star charts, whatever it is, everybody's been pretty bullish on China over here, even when nobody else was. So looking at China, China's been doing really well. And then looking at cotton. Now, cotton is for the first time is really diverged from what China is doing. And that's for a lot of reasons. One of those is, the situation we're in with tariffs, the situation we're in globally. But who buys the most cotton? And that's China. Who produces the most cotton t-shirts and so on and clothes? That's China. So most of the time you'll see these move together. And I think that at some point, if we're looking at a weak dollar cycle, we're looking at the rest of the commodities start to move. I really want to start to see cotton move as well. I think that's probably the next commodity that's going to make a big move. The positioning's been a little bit offsides for a while. Also, with China, global growth, emerging market growth, and so on, we should see this move back up. I think they'll start to, once things start to calm down a little bit, we'll start to having to have more exports out of the United States into China and other areas. I know now they're kind of going into Brazil, buying more cotton from Brazil. So this is kind of an interesting setup, interesting time. This thing's getting up and over its 200-day moving average. Might be an interesting one if you're a bottom fish style trader. I'd like to wait for another new high in it, but going to a half position above when a good close above the 200-day is a good idea. Going to a full position on a 100-day high or 200 or 52-week high, however you do it, I think is the next idea. And this thing will trend. When cotton trends, it really moves. Like you can see back in the end of the 2000s, even in 2020, like cotton had some really smooth, nice trends over those years. I think one's setting up right now, and it should. I would be surprised. Everybody keeps asking me about this one too. Do you think China will catch down to cotton? And the answer is absolutely not. That would be the most surprising thing that could happen. Markets like to make a fool out of everybody, so you never know. That could be something that happens. I would be very surprised though in an environment where the dollar's getting weak, international stocks are ripping that much. I think that cotton will follow China and probably end up moving to highs pretty soon.
Totally, yeah. And if you go to the next chart, Jason, so like not only do we have a really, really nice Bollinger Band squeeze shaping up here, but you also have extreme um, pessimism from the speculators. The speculators, the dumb money, are holding one of the largest net short cotton positions ever in all of history. And this comes after cotton's gone from like 160 to 60. It's gotten crushed over the last few years. And now they want to build their largest net short position. I mean, what are these guys thinking? I think they're about to get steamrolled. And I think that'll come on a break above that 70-ish level, which would also start to unwind this Bollinger Band squeeze that we're seeing. And Jason, you and I know we've looked at a million charts over the years. And man, do the best moves start with extreme volatility compression. And when you overlay that with the mispositioning in the COT, this is one of my favorite setups in the entire commodities complex right now.
Yeah, I agree. I think that's well said because the chart you kept highlighting about platinum, that was one hell of a setup. If you see and right now we're seeing in the CRB index, lowest volatility ever in the CRB index. So I think a lot of these are just set up to make major moves, and it's going to catch a lot of people off guard. So biggest part of the story today, continue to pay attention to these things. I think commodities are set up to make a huge move. We've seen gold, we've seen silver, copper even tried to join the party. All of these have joined the party in different ways at different times. Even the softs, orange juice was really great a couple years ago. Hasn't been great at all lately, but it was really great a couple years ago. Same with cocoa, had a huge move. Coffee, huge move. Looks like it's still going. Now I think it'll be cotton, possibly the CRB index, which is mainly energy. So if we start to see those move, the commodity cycle is really on, and that's time to kind of get very broadly involved. So
Totally, yeah. And I will drop a link in the chat Right now, we have a special offer for Gold Rush. As you can see on the screen here, the usual price is $12.99 for an annual plan to All Star Charts Gold Rush, which includes Jason and I's, as well as some others on the All Star Charts team. Research on all things commodities that includes energy, metals, coffee, cocoa, everything across the board in commodities. We cover it, including precious metals note every single Monday, where we are outlining precious metal stocks in every single one of those reports. And boy, is it an amazing time to be looking for precious metal stocks. They are absolutely ripping. You can look at the ETFs, and they're crushing it. Since gold made new all-time highs. Um,
Yeah, 80%,
about
80% in the GDX the other day.
Yeah, it's off the charts, Jason, and nobody's talking about these. People can't get over the AI stocks. And like, sure, AI has been great and it's been wonderful, but that's not all there is out there. Diversify your exposure into some of these other areas that are performing extremely well. We talked at the top of the show how we think there's a big move in bonds coming. We're constantly outlining bond trades in our
Bond
bond
trades,
report.
currency trades, any of the stocks inside the commodity sector. So anything you guys are looking for, feel free to jump in, hang out with Sam and I, ask us questions. We love to hear from you guys. We got to head out. We'll see you guys soon. Next week, we'll be having our video for All Star Charts Premium members, and we'll see you then.
Adios, everyone.